We are living in some scary times, and the alarms are being run on our economy as the signs are starting to show, not just for us who are keeping up with the truth, but for the select few who are actually starting to wake up and realize that something is completely off. But for us to get to what's happening right now and the future, let's go back to last year with Fed Chair Jerome Powell.
Chair Powell, I wanted to ask about the balance sheet discussion you've had at this meeting. Can you give us any more details? Did you discuss whether to cap runoffs or whether to increase those caps over what period, if there were any details?
Yes, thank you for asking. So at our meeting today and yesterday, we made excellent progress toward agreeing on the parameters of a plan to shrink the balance sheet. And I'd say we're now in a position to finalize and implement that plan so that we're actually beginning runoff at a coming meeting, and that could come as soon as our next meeting in May. That's not a decision that we've made, but I would say that that's how well our discussions went in the last 2 days. So a couple things just to add. We'll be mindful of the broader financial and economic context when we make the decision on timing, and we always want to use our tools to support macroeconomic and financial stability. We want to avoid adding uncertainty to what's a highly uncertain situation already. So all of that will go into the thinking of the timing around this. In terms of I would say this. I don't want to get too much into the details because we're literally just finalizing them. But the framework is going to look very familiar to people who are familiar with the last time we did this. But it'll be faster than the last time, and of course, it's much sooner in the cycle than last time.
Yes, the last time they crashed the economy. I'm kidding, by the way. But yeah, he's talking about the balance sheets. And let's be real here. The Fed doesn't want to be holding assets that aren't performing well. Heck, they'd most probably have assets that they're going to call complete trash. And as you guys can see, and if any of you can remember, during the health crisis, the Fed built up around $4.6 trillion worth of assets that comprised of treasuries and mortgage-backed securities. This quickly helped liquidity in the markets and flooded us with credit. This in turn pushed interest rates down on mortgages and student loans, even though the Fed doesn't necessarily control the rates on these products. Now, imagine doing the opposite. Imagine the Fed letting these mortgage-backed securities and treasuries roll off its balance sheets. What happens next? The opposite, right? That's the most plausible answer, and we're feeling its effects right now. Tell you what, we can do this in the comment section. If you guys think that we're worse off compared to when he said this, comment a quick yes down below. If not, just comment no. And while you guys are at it, make sure to drop a like on this video and subscribe to the channel. Turn on all notifications so that you guys are up to speed on all of the things that continue to happen around us that directly impact and affect our way of life. I'm always grateful for you guys' support. So getting back to what's happening that affects our way of life, another stunning economic sign is showing us the truth. What's happening, right? Well, recently we saw a huge inflow into money market funds. Just how huge? Try $64 billion. That is a new record high. Now, despite that, we're now seeing both large and smaller banks decline in loan volumes. Not only that, but there is a lot of banks that are being supported by the Fed right now through their emergency funding facility at around $108 billion. Would you look at that? It just seems to keep going up, huh? Now you gotta realize, if the Fed didn't do this, some of the banks would have just been fried because they got to stay afloat to maintain the deposits with the loans that they have out. Because just like I said, there aren't very many loans that are going to be going out. This is the reality, folks. They need to keep this up. But of course, that's not what you're going to hear on TV. You're going to hear all about the optimism, and I don't even know how to phrase it. Maybe false hope? Yeah, a false hope that things are getting better. You know what? If you want a strong economy, lower gas prices, lower food costs, cheap insurance, and a stock market that has no problems coming for it, then listen to the narrative. Listen to the unified message that everything's going to be better than expected and that we as a nation have nothing to worry about.
The latest CNN polling showed that just 34% of Americans approve of the president's handling of the economy. So is there a risk that this new branding could backfire? And are you confident that this new messaging push is going to change Americans' opinions of the president's handling of the economy?
So we believe our job is to continue to speak to the American people, to lay out what it is that the president is doing on behalf of American families. And that is important. And we have the data to prove it. We have the numbers to show that his economic policy has indeed worked.
Believe it or not, this was just in June of this year. And just to show you guys the truth, because I have a tendency to do that every single day, people here in this amazing community know exactly what I'm talking about. But do you guys remember the great job numbers that they bragged about? See, they have this tendency, because y'all know that they have these tendencies too, but they have this tendency of blowing things out of proportion. Kind of like saying that job numbers are really great without actually revealing why the numbers are showing the improvements. But let's go ahead and talk about it for a second, right? Now, we supposedly gained like 336,000 jobs already, right? It was one of the key points of the president, and it's something that the White House has done multiple times under this administration. But what if I told you that newly employed workers for the same time frame was just 86,000? Would that blow your mind? Because that's what the household survey, which is more accurately showing.
We've got some breaking news. The September jobs report just out, giving us a new snapshot of the state of our economy. Some interesting numbers here. More than 336,000 jobs were added last month. But get this, that is far more than the 170,000 jobs economists had predicted. The unemployment rate in the U.S. stands at 3.8%. That remains unchanged from the month of August. Breaking it all down for us, who else but our economic dream team? NBC News business and data reporter Brian Chung at the big board, and Investopedia editor-in-chief Caleb Silver here on set with us. Good morning to both of you. Brian, let's start with you. Break down these numbers for us. What do these new job numbers look like by industry? Where were jobs added?
Yeah, good morning, Savannah. Some of the reactions I'm seeing online, holy moly, wow. I mean, these are crazy numbers when you take a look at comparatively where we were in the month of August. In that month, we added 187,000 jobs. Again, as you mentioned, in the month of September, we added, check this out, 336,000 jobs. What's really interesting about this, too, is that this is well above the pace of job ads we had seen in the earlier part of this year. Something very also worth noting is that the unemployment rate did stay at 3.8%. Yes, that's a little bit above the 3.4% we had seen in the beginning of the year, but still historically low by all standards. And again, that tends to fluctuate anyway. So again, 336,000 jobs added in 1 month. It's been quite a while since we've seen a number that big.
Yeah, wow. And quite a number, right? Since it's been quite so off from what economists had predicted.
It's also worth noting that part-time work makes up for a lot of those numbers that we're seeing. Meanwhile, full-time jobs, the ones that actually pay us enough to kind of live on, those are being lost. For September, 22,000 full-time jobs were lost, while 151,000 part-time jobs were made. It's not a good trade-off. Now, let me ask you guys, is this a time where a part-time job is going to pay for your rent, your gas, your food, electricity? I don't think so. Now, if you ask me, I'm pretty sure that a lot of folks are working multiple part-time jobs just to get by. In fact, for September alone, the number of people working 2 or more jobs rose by 123,000, bringing it to a total of 8.151 million Americans, which is the highest since January 2020. So it just kind of seems like they're reporting multiple jobs, even though only one person is working all of them. I mean, is that fair to report? It's like we're being duped with headlines that don't necessarily mean the same thing. You know what I mean? But of course, you and I are the people who have skin in the game. We actually go out and buy food, pay for gas, all these things. So now that you've heard from me, let me hear from you guys. What are your thoughts on today's updates? Are you surprised at all? Please share your thoughts, share your opinions down below. And before I go, I just want to thank you guys so much for being with me today. Appreciate the love, and I'm gonna see you guys on the next one.